All right, today we've got something pretty wild to break down for you. It's a proposal from a company called BitMine Immersion Technologies. And when I say wild, I mean the numbers here are just staggering. They're asking their shareholders for permission to completely change up their stock structure. And yeah, that really gets us to the heart of it, doesn't it? Why would any company want to increase its available shares by 10,000%? No, that is not a typo. We're talking about a 100-fold increase. So, what's the logic here? What could possibly justify a move this big? Okay, let's just look at the numbers because they really tell the story. Right now, the company is authorized for 500 million shares. The proposal? To jack that number up to 50 billion with a B. That's not just a tweak, it's a quantum leap. And a number like that, well, it's going to need a seriously good explanation. So, let's dive into that explanation. This whole thing comes straight from the company's chairman, Tom Lee. He's the one who laid out the argument for shareholders. And let me tell you, it is built on a very, very bold vision for what's coming next. Now, he gives a few of the usual reasons you'd expect. Funding capital markets, enabling transactions, maybe buying another company. Standard stuff. But he's also crystal clear that one reason is way, way more important than all the others. Getting ready for future stock splits. And this, right here, is where it gets really interesting. The entire reason for this 100x increase, it all comes down to one thing: stock splits. The company is basically saying they believe they're going to need to split their stock, and not just a little bit. We're talking huge, repeated splits. Okay, before we get any deeper, let's do a quick refresh on what a stock split actually is. It's pretty simple. A company takes its existing shares and just divides them. So in, say, a 2-for-1 split, your one share that was worth $100 becomes two shares worth $50 each. The total value you own, it stays exactly the same, at $100. The main reason companies do this is to make the price of a single share look a lot more affordable and accessible. So here's the key takeaway, right? A company only even thinks about splitting its stock if the price is getting really, really high. Which brings us to the obvious next question. Why in the world does BitMine think its stock is going to go on such a massive run that it would need these kinds of enormous splits? And the answer, at least according to the chairman, has everything to do with Ethereum. Yep, the world's second biggest crypto. Now, since BitMiner is in the crypto mining game, this isn't totally out of left field. Their whole prediction is basically built on a direct line connecting their stock price to the price of Ethereum. The basic idea is actually super simple. The chairman lays out how BitMine's stock price pretty much moves in lockstep with Ethereum's price. When ETH goes up, their stock is expected to go up right along with it. So really, if you want to know where BitMine is headed, you have to first figure out where Ethereum is headed. So why the laser focus on Ethereum? Well, it all comes down to this big idea called tokenization, which is basically turning real-world things, like stocks or real estate, into digital tokens on a blockchain. They're not alone in thinking this is a big deal. They even point to this quote from Larry Fink, the CEO of BlackRock, calling it a total game changer for finance. And as the chairman sees it, Ethereum is the place where all this innovation is happening. You've got Wall Street building on it, and it's where the vast majority of value is locked up in the world of DeFi, or decentralized finance. So from their perspective, Ethereum isn't just a crypto. It's becoming the base layer for the entire future of finance. All right, so if BitMine's fate is tied to Ethereum and they think Ethereum is the future, just how big do they think this can get? Well, you might want to brace yourself because the numbers they're projecting are, let's just say, ambitious. And here we go. This is the forecast. The chairman is saying if Ethereum hits $22,000, BitMine stock will hit $500. If Ethereum gets to $62,000, their stock goes to $1,500. And then there's the moonshot scenario. Ethereum at $250,000. The implied price for a single share of BitMine? $5,000. I mean, to call these predictions bold is a bit of an understatement. Okay, so now we can finally connect all the dots. We can take these huge price targets and link them right back to that original proposal. This is where the math really shows us why on earth they're asking for 50 billion shares. Remember, the goal is to keep the stock price at a level that feels accessible to everyday investors. Think something around $25 a share. Because, let's be honest, a stock that costs $500 or even $5,000 just feels out of reach for a lot of people. So if the price ever gets up that high, they'd want to split it back down. So let's actually run the numbers. To take a $500 stock and get it down to $25, you'd need a 20-for-1 split. Boom. That creates 8.5 billion shares. Now, what about a $1,500 stock?
That's a 60-for-1 split, which would result in 26 billion shares. And in that craziest scenario, a $5,000 stock, you'd need a 100-for-1 split, creating a mind-boggling 43 billion shares outstanding. And that is the number that explains everything, 43 billion. In the chairman's most optimistic world, that's how many shares they'd need just to keep the price looking normal. And that is why they're asking for permission for 50 billion. It gives them the headroom to make all these splits happen if this explosive growth actually comes to pass.
So, when you see the whole argument laid out, you're really left with one big question, right? Is this visionary? Is this some incredible forward-thinking planning for a future that the rest of us just can't see yet? Or is this just speculative insanity based on a chain of super optimistic what-ifs? The logic is there, but man, the conclusion is anyone's guess.
And look, this isn't just some fun thought experiment. This is real. The shareholders at BitMine have a deadline of January 14th to look at this wild forecast and decide if they're going to approve this equally wild request.